today I wanted to talk about a few things around the financial services industry in the Philippines, and which can be also translated to a lot of emerging markets across the region. The few things that I wanted to talk about was, firstly, what's the state of the industry, of the financial services industry in the Philippines. Specifically, I'm going to look at two players in the ecosystem of financial services, and that's the consumer and the merchants. There's much more than that. Our ecosystem is broader than that. You have government, you have the supply chain, you have many more important pieces of the ecosystem. But I'll focus on the consumer and the merchant. So what's the situation today for the consumer and the merchant? What do they actually want, right? What is actually what they are going to want to have in order to improve as citizens, as people, but also as businesses? And then what are we doing in order to help that? And when I say we, I don't just mean PayMaya, but I mean the industry as a whole, the fintech industry as a whole in the Philippines. And then finally, I'll say, is that actually feasible? Is it doable? And I'm going to look very briefly at a couple of examples from other countries where this has been done, and they've shown us the roadmap on how to succeed in the Philippines. So first of all, the situation in the Philippines in terms of financial services is, I'd say, quite fragmented. You'll look at some statistic, you'll hear a lot today from other people. Anywhere between 3 and 5% of people actually have a credit card in the Philippines. There are only about 27% of people who have a bank account aside from that. So about 30% of people have some sort of bank account. Majority of those are actually underserved by their financial institution. So they won't be able to get a loan, they won't be able to get a savings account, and so on. Now, that's striking, because that means that 95 to 97% of the population actually has a need for better financial services. And even the top end of the population, the ones who have credit cards, who have access to credit and savings and all of that, let's not forget, those are the people who in other countries like China, like the US, use fintech in their daily lives to make payments, to send money to each other, to pay their bills, to buy their airtime, and so on. And that's companies like Venmo, companies like Alipay, like Tenpay, that have been dominating the market at the expense of banks. Now, the Philippines has one big quirk also, and that's that 96% of people are on prepaid mobile subscriptions. So for a lot of us in the room, it doesn't really matter on a monthly basis what happens to our phone. We don't even check our bill. There's direct debit. We don't even know how much the bill is most of the cases. In the Philippines, 96% of people buy data on a sachet basis, or on a day-to-day or 3-4 times a week basis. Now that's very important, because it means that a lot of these people who we think are smartphone users, let's not forget the Philippines is past the tipping point of 50% of smartphone adoption. The telcos are investing a lot of money in making sure that LTE is available across most of the urban areas, and that 3G is now available in a lot of the more rural areas too. So that means that we think that a lot of the Filipinos who have smartphones and data connections are online, but that actually means they're not, because they're not switching on their data. Okay, so I'll talk a little bit about that later. So the two messages on this slide is, number one, a lot of people are underserved by the current financial system, and a lot of people don't have data connections or don't have a regular data connection. Now, on the merchant side, merchants are cash reliant. Cash dominates this country. I'll show a statistic later about this. And mostly they're offline. So we think of Filipinos as being very entrepreneurial, which is 100% true, right? A lot of Filipinos have a few businesses that they run. A lot of them are extremely entrepreneurial. But of the 1.4 million enterprises that operate in the Philippines, only 1% have an online presence. And that obviously is a huge difference compared to more developed markets like Europe and the US and China. Now, that translates to this, which is 1% of transactions, of all transactions by count, are actually done via electronic or digital means. That's a striking figure, isn't it? And I think between us and the central bank and other big players in the fintech industry, as well as the other banks, other financial institutions, our goal is to get to 2020 with the number of 20% of electronic payments. So there's a huge shift that's happening over the next few years, and we're a part of that, in allowing consumers and businesses to transact on an electronic or digital basis. Now, why are we just at 1%? What's what do customers actually want and what are they not getting? Well, customers want to be able to make payments, right? They want to be able to pay for the goods that they use on a daily basis. They want to be able to pay their bills in an easy way. They also want to be able to have some savings here and there. They want to be able to buy their airtime. As I mentioned earlier, that's a huge day-to-day use case that they have. And they want to be able to send money to each other. Filipinos send money a lot from urban areas to rural areas, to their families, and so on. We're also a big player in sending money from the urbanized areas to the rural areas. And also, they want to get microloans. And Lito spoke a little bit about that earlier, before the break. So you can't give them this in a way that improves their lives today, right? By not having an easy onboarding procedure and an easy way to actually load their accounts, right? You can't expect someone to move from cash to something else if their experience is worse. On the merchant side, merchants want to be able to accept payments from all customers, right? Cash is very good at that. Everyone has cash. Every merchant can accept cash. They want to be able to manage their cash flow, and they want to be able to access working capital, right? To manage their working capital. But most importantly, they also want to increase their sales and their visibility. So if you're able to help them with working capital, to help them with visibility and sales, you can then make sure that the acceptance that they want is not just cash. They also want other types of acceptance. You need to provide them with those opportunities. So how are we addressing those needs? And I say we as our company, but there are other companies in fintech in the Philippines that are doing a terrific job at that too. Now, of course, on the consumer side, you need to make sure that the first barrier to adoption, which is onboarding, KYC, is actually seamless and ubiquitous, that you can do it from your couch. That's one of the things that we did when we pioneered video KYC, and a lot of companies are using video KYC now in order to access their customers. A few years ago, that would have been a dream in the Philippines. You need to be able to have seamless and ubiquitous loading. So it doesn't matter. I like whiteboards anyway, so if you guys have a whiteboard, I can just put it on the whiteboard. Anyway, you need seamless and ubiquitous loading, so allowing people to reload their wallets or their accounts from anywhere. If you're a banked customer, reload your wallet through your bank account or through your credit card. If you're a unbanked customer, have as many physical locations so they don't have to think, oh wait, where can I reload my account, right? And at the same time, for those who are part of a government program, part of a company, for example, to be able to have their salaries sent directly there or their allowances sent directly there. So we work very closely with companies as well as with local government units in order to make that happen. Now, once you've given them, you've removed the obstacle of accessing an account, you've actually given them the possibility to load their account easily and ubiquitously. Now, the next stage that you need to do is you need to give them a reason to actually have that account in the first place, and that's the multiple use cases. So if you look at the fantastic job that TenPay did, they actually thought, okay, how can I make sure that customers actually do every single behavior that they have on a daily basis, they do it through our account, right? And that's, I want to buy something online, I want to buy something face-to-face, I want to send money to someone, I want to pay my bills, I want to buy some airtime. All of those are use cases that you need to be able to address if you're going to be a sticky part of their life. Now, I think the most important thing that TenPay did actually was, and a lot of other companies have tried to leverage on that. You've heard in India right now, WhatsApp just launched their payment service for consumers. It's access through a social channel. Now, that's the third box that I have there, but to me, it's the most important one. Including social into people's day-to-day lives of payments is something that's extremely important. How many times does the average person access their bank account? I don't particularly like my bank. Don't tell them that. I actually don't like my bank. And I actually open my messaging platform maybe once every half hour, maybe once every 20 minutes, right? So if I can include a way for me to manage all of the use cases that I mentioned earlier within one social platform that I use the most, then that's a fantastic experience. And that's what we tried to do by integrating our own platform into Messenger. So now you can send money from your Messenger account. Now, the other platforms are, the other two channels that are really important are obviously the two different types of phones that people have. That's smartphones for a certain demographic and feature phones for others. You need to be able to allow people to access their accounts from all different channels. And also, in my mind, you need to be telco agnostic. In many countries in emerging markets, because these projects tend to be telco-led, they tend to say, okay, you know what, I'm only going to be servicing the ones from my own ecosystem, my own family. And that, I think, is very limiting to customers, right? You cannot have a proposition that is going to enable money to flow better in the country by just enabling a half of the country or a third of the country to be able to use it. Now, on the merchant side, you need to provide end-to-end acceptance. So end-to-end acceptance to me means not just on the payment side, where I've mentioned here from the payment gateway to processing, fraud tools, acquiring, but it's also, I need to enable them to have more customers through their door. That could be by accelerating the way that they receive payments, so making the customer experience faster or better. It could also be by enabling them with certain promotions that I can give them via other parts of my company or ecosystem. So for example, allowing my merchants to have a promotion from a particular FMCG that I'm working with, Unilever or Nestle or whoever it might be. Goods at a discount based on the fact that you're using my type of payment. The next thing is, it all needs to be within one portal, okay? If you're accepting, a lot of businesses are starting to accept both physical payments and online payments. You cannot have two separate ways of being settled, two separate ways of accepting payments. It has to be an all-in-one omni-channel experience. And that's what we've been providing to our merchants. Now, one of the biggest developments in this country has been, we've moved from traditional acceptance, which is the POS and now the MPOS, that have had great developments or innovations in the last few years, and you'll hear a little bit from Veritas Pay later on this. But also on the face-to-face space, we've moved on to QR. QR has been a big development over the last few months in the Philippines, and my projection is that by 2019, the majority of payments that people make on a day-to-day basis of electronic payments will actually be via QR. And that's because I have my phone out all the time, as I mentioned earlier. If I can integrate a payment experience that is easy and seamless to my mobile phone, which is the device I have all the time, then that, similar to what's happening in China, will be the default way for me to make a payment. And of course, you need to be acceptance of all schemes. So for us, we're a company that has its own scheme, PayMaya, so a PayMaya user can pay at a PayMaya merchant, but I don't want to limit my merchants and my customers to pay and accept just from my own people, right, from my own subscribers. So we've enabled Visa payments, MasterCard payments, JCB, PayPal, and many more to come, as well as BankNet, obviously. So QR, as I mentioned, is one of the biggest developments. I didn't want this to be a promotional, so I'm not going to go through the page with our logo on it. But this, I think, I'll go back to the part where I was discussing about mobile subscriptions. No matter how easy you make an experience for a merchant or for a consumer, if they don't have a data connection, they're going to keep using the former way of making payments, which is cash, right? So one of the big developments that we've tried to implement was, let's give people free data, right? And how do you do that? There's a lot of enterprises out there that want to be able to provide customers with free access to their website. So for example, if you're Zalora, you really want to have customers' eyeballs on your website. But let's say average Juan, who's on the bus 4 hours a day, can't access his phone because he doesn't want to deplete his data, obviously. So if you allow Zalora to pay for his bandwidth, his megabyte bandwidth, at that point, Juan can actually get online and buy something on Zalora, right? At that point, you have the enterprise is happy because they have more eyeballs and more transactions. The customer is happy because he's getting free access to data. And we're happy because we're obviously providing the service and we're making money on the back of it. Now, the vision for us in terms of payments is, as I mentioned earlier, together with the central bank's objective of we need 20% of payments by 2020. That's a bit of a gimmicky number, but we actually think it's possible. And we actually think that that will drive more economic activity in the Philippines. This is an entirely brick and mortar, for now, economy that can make that digital leap. But the only way it can do it is, first of all, if e-commerce actually helps us in that thing. And I think e-commerce has been taking great strides, both on the traditional e-commerce of selling gadgets and electronics and all of that, but also on the airlines and other types of large merchants that have been starting to sell predominantly online. We think it's possible. Now, we think that by 2020 or thereabouts, we'll be able to enable 30 million customers, whether it's merchants, consumers, government entities, and so on, into the financial ecosystem in a digital way. And we think that's a very powerful number too. So 20% of electronic payments by 2020 and 30 million customers. We're only right now, as I mentioned earlier, at the lower end of this, right? But there are countries that have shown us the way. Even just Thailand and Malaysia are in front of the Philippines when it comes to electronic payments. Singapore, obviously, and obviously Sweden, which is the runaway train in this case, at 80, in some cases you even hear 90+% of digital payments. So it's possible, and as development comes into play more and more, you'll see the Philippines actually make a leap in that table. And finally, there have been countries that are more similar to the Philippines than a Sweden, for example, that have made that leap in the past, right? So we really think we're poised, and this is the right time for it, in order to emulate these countries. You'll see China, for example, with WeChat Pay at more than 600 million MAUs, monthly active users. You'll see India that has been able to KYC, digitally, biometrically KYC 1.2 billion people. That's crazy. 1.2 billion people have been biometrically KYC'd in a country like India. We think the Philippines is difficult with 7,000 islands, the number of religions, languages, different types of peoples and cultures they have in India, and they managed to pull that off. So why can't we pull something like that off? And obviously Kenya with the former shining example, which was M-Pesa, with more than half of the population actually using M-Pesa. So this has been done before, it can be done, and I think the Philippines is poised to it. So just to wrap things up, I think on the consumer side, to me it's all about providing accounts as easily as possible by breaking down the barriers of KYC and onboarding, providing them with the possibility of obviously making as many use cases as possible and tying it into a social element of it, and obviously getting merchants on board by providing them with additional business and a connection to their supply chain. I think that's basically the key of it, and it has been done before. So thank you very much for your attention.
We are currently going through one of the biggest transformations in financial history, the FinTech revolution.